Daily outlook for Thursday, July 23rd. All right. Yesterday tried to expand higher, right, as anticipated because of the Tuesday classic buy. Price ended up doing so at first. Well, at first retraced lower inside of the range and then expanded as anticipated, but ended up finding a failure. In fact, the market ended up creating a divergence at the previous daily high, which in my opinion is pretty significant. Pretty significant in the sense it doesn't mean that price will reverse. It obviously can, but what I'm saying is even if this week will be open low high close, because of this divergence and because of where it happens overall, right, inside the range here of the discount order block from the previous monthly range, right, we have this fair value gap, this SIBI. I do believe that this is telling us that the market, again, even if it even if it will end up trading back higher, or right fully start trading lower from here, we'll revisit some kind of discount levels. Okay, so I'm looking specifically around the range of the previous daily low. We have 75% here of this discount order block, and at the low of this discount order block we have here the current weekly lows. Okay, and below those weekly lows we have this large wick here, right, and the market would start trading back towards 25-50% of the weekly discounted fair value gap. Okay, so I'm paying attention to 28,900 down to 28,700, give or take, coming inside of New York to get an understanding if price has came back inside the range to retrace or if price is expanding lower. Okay, that's the idea of how I want to pay attention to these levels. So in terms of a sell side drawn liquidity, so a discount drawn liquidity, I do believe that if today will be some kind of sell day, or deliver as an open high low close profile, I do believe that 50% of this wick, right, so essentially the lower half of the discount rejection block, which ended up creating the previous weekly low, this should be an objective. This also can be an objective, okay, for the day to create a low, for them to reverse either back higher or at least back inside of the range. Okay, so overall discount array, I do believe this should be an important level, the discount rejection block. And in terms of a premium drawn liquidity, unless price were to find quickly a reversal after trading below the previous daily low, if it does so, then I do believe that the drawn liquidity should be 25% to the high here of the discount order block. If the market will trade lower inside of the range, this can be, say, back around the weekly open or making a new low of week and then reverse. Then a low-hanging fruit drawn liquidity for the day can be the new day opening gap, or overall the current weekly highs that we have. Okay. The 4-hour chart is essentially telling us the same picture. Yesterday stayed pretty tight around the range. You can see price failing to expand right in the direction here of the classic buy of Tuesday, right? Price had expanded, retraced, expanded again. This was what we were anticipating, but failed, right? It left a failure swing after creating, right, a divergence with the S&P 500. So this is why I'm saying that even if the trend of the week will continue to be higher, the market will nonetheless want to revisit some kind of discounted levels. Okay, and this can look like, again, the previous daily low. It can look like here, this 4-hour fair value gap. We have an order block, a fair value gap. These levels will be relevant to the 3-day look back. We'll look at that shortly. But overall, I do really like this level here, the rejection block. It can be that price delivers a classic sell and runs through it, but overall I would like to see, right, a shakeout below here, the current weekly lows, to then trade back higher. Okay, again, this can be as a reversal or can be, say, some kind of profile like this, some kind of swing to Z profile. So about the same discount drawn liquidity here as the daily, right, which would be the rejection block from the previous weekly low. And in terms of premium targets, looking at this chart, again, we're looking at, again, obviously all depending on how deep New York will open, if this is what's happening. Right, say New York opens at these levels and price were to find a reversal, then the new day opening gap can be a low-hanging fruit drawn liquidity followed by here the previous daily high. If not, if you come inside the New York session and price simply swept the previous daily low and is already trading higher inside the range, then I do believe that the drawn liquidity should be the range again from 29,700 up to 30,000. This is a level that we were talking about. Right at 50% of the previous monthly range, we have that suspension block. This does remain here a pretty valid drawn liquidity, premium drawn liquidity, right? It would be again all part of this consolidation here, price moving from discount back to 50%, and then if that were to happen, we'll then assess how it moves at 50% to determine the next drawn liquidity. Okay, this is mostly what I'm interested in. Let's look at the 3-day look back. So as we know, we come from a New York reversal profile, so an expansion profile, which was followed by a reversal, right, as a classic buy here, expansion to expansion. And today, well, yesterday, right, yesterday's trading day, delivering as a New York reversal profile, right, from the open price coming back inside, right about 50% OTE of the previous daily range, and then as anticipated expands higher. But as we saw on the daily, this expansion ended up failing, right? Ended up creating a divergence at the previous daily high with the S&P 500, and then was followed by a bearish closure, right? You can see the expansion here at the closure. Okay, so because of this failed expansion as a continuation, again, this is why I'm assuming that the market will want to revisit at least the previous daily low, if not lower prices, such as a new weekly low, right, and then followed by this large rejection block. So let's look at what's inside of the range here. All right, at the highs we have these relative equal highs. Obviously these are backed up by a divergence with the S&P 500. At the low we have the same scenario, right? We have relative equal lows, relative equal highs, relative equal lows on both sides of the range. The reason why in this case I'll be using the 3-day look back and not the previous daily range is because the previous daily range was a failed expansion. Okay, and because it's a failed expansion, I do believe that it's going to want to draw back towards some sort of discount PD rate. Okay, and if price were to trade past the previous day low, there's not going to be any, right? So I'm simply going to be using here the range of the 3-day look back. So relative equal highs, relative equal lows, 25%. I did like this, looking at price. You can see here that there's what was an order block, which has now become a bearish breaker here, right? And this level happens to be right at 25% here of the 3-day look back. So I do think that this is an interesting level. If we look at what's at 50% of the range, overall you got the range here of a 1-hour bullish order block, okay, which is the intermediate term low created by the New York reversal from yesterday. As we know, New York reversal profiles tend to always create intermediate term highs, intermediate term lows. This was the case for Monday. This is the case for yesterday. Okay, so there's a couple ways you can view this, right, as to which PDA you want to choose. If you want to be a bit more precise, in my opinion, you can grade here simply the rejection block, okay, of the intermediate term low. Right, this is something that we had done also for the daily profile of Tuesday, analyzing the range of Monday. Right, price had left here an intermediate term high inside of the range, and as we saw then on Tuesday, price ended up reaccumulating inside of these levels very accurately. Okay, so this can be an option for you. If not, here you can see that at 50% we still have the range of a fair value gap. Okay, this is also that same fair value gap that we used on the 4-hour to anticipate here the New York reversal. So you could also, right, this is gonna have to be up to you. Do you want to use the fair value gap, or do you want to use the wick, right, of the rejection block of the intermediate term low? Personally, I'll be using the levels of the 4-hour fair value gap. Okay, but there's nothing wrong if you want to use the wick here, which even if I won't have it on my chart, but it's something that I'll be paying attention to coming inside of the New York session, how this specific wick was treated. Okay, since it's an intermediate term low. I have a bit of levels on my chart, sorry. Down to discount, I'm not sure there's anything too obvious here, so I wouldn't mark out anything. I would simply keep the range here of the 4-hour fair value gap. If you don't want to use the range of the fair value gap, okay, there can be an argument as to why you wouldn't want to use it, but to me it has proven to be sensitive, right? The price has came back many times inside of this fair value gap and has provided trading opportunities. So this is the reason why I'm prioritizing the fair value gap over, say, the rejection block of the intermediate term low, or this here, right, which is also a valid level to use. We have the range of an order block cutting from 50% down to 75% of the range. Okay, so technically that would be the level for me to identify, but since it overlaps with the range of the fair value gap, I won't be putting it on my chart. Okay, so 25%, we identified a breaker, right? Where it's currently a breaker. We identified at 50% down to OTE, the range of the 4-hour bullish fair value gap. Again, you could be using simply this level, but personally, since this fair value gap has provided trading opportunities, I won't simply have just this level on my chart, but in the moment when I come inside the New York session again, I will want to put up the quadrants of this wick, right, and see how price moved around it and what did it leave behind inside of it. And then, as we saw, right, relative equal lows, relative equal highs. And I also would like to identify, in case price were come back to a deep discount, the quadrants of the rejection block from Monday. From the previous weekly low here from Friday. And then in terms of a drawn liquidity, right, I'm going to want to put up the levels from, this is the suspension block at 50% of the previous monthly range. Okay, so this is, I'm going to have my chart identified coming inside the New York session. If I see that if I see coming inside of New York that price is already trading above the range, and simply had a shallow sweep below, inside of the range, then I'll assume that the drawn liquidity will be, the range from around 29,700 up to 30,000. If price coming inside of New York is still consolidating around these levels, I would prefer to wait for here range high or range low first to be traded, right, and then from there seeing the reaction. Is it a sweep? In that case, I'm going to want to target the other side of the range, or is it, right, this price consolidate and then end up expanding, okay, creating some sort of fair value gap, balanced price range around range high here or range low. This can be another option. In that case, then I'm going to want to, well, ideally, if this is the scenario that happens, I want to identify a daily profile that is a range to consolidation profile, okay? Because if it is not, and price came from consolidation between the PDA at, around 50 slash discount and premium here of the 3-day look back range, then this can lead to some sort of seek and destroy-ish consolidation, okay? Sorry, seek and destroy-ish conditions. And if not, if I come inside New York and I see that the market is trading near, right, deep discount, that would look like the range of the rejection block from the previous weekly low. Then it's going to be important for me to see how 930 opens. Okay, does 930 open higher first, then trade lower? In that case, in my opinion, that can be a good trading opportunity. I'll be very careful looking for shorts if 930 opens lower. Okay, a large rejection block like this tend to lead to high resistance price action. Okay, this is something that we saw here, for example. Large wicks typically, since they're balanced price range from a lower time frame perspective, from experience, you don't tend to see aggressive rallies through them. Okay, obviously the larger the wick, the more resistance will be offered inside of that wick. Well, not offered, but overall the conditions in general of the market, right, will be higher resistance. Right, I was saying that I would be careful about shorting if 930 expands inside this level. Even if, right, it doesn't mean that you have to look for a reversal profile. Right? That's not, it doesn't mean that it will happen. Obviously, you need to identify the context of the moment. Say something that would look good here for a New York reversal is 930 expanding into it, creating divergence at the weekly low, and then from there, right, changing gears. That would be a good opportunity. But in my opinion, without a significant divergence inside of the range, such as what we had yesterday, you have to be careful for this type of profile, okay, the swing to Z, especially if the overnight session has a large expansion and 930 doesn't offer a retracement or doesn't come from doesn't come from consolidation. Right, say even the pre-market session expanded instead of the pre-market session coming from expansion and then pre-market consolidates, right? If that's the case, then you can be selling short at 930 anticipating lower prices, but I'd be careful about holding up to this level. Okay, it obviously depends the context. The higher or the more significant the retracement, the more chances you'll have on your side, in my opinion, to target range low. It's like a bow and arrow, right? The more you pull the bow, the faster the arrow is going to go. Well, it's kind of the same idea here, in my opinion, as to what to anticipate for 930. Okay, so quick recap. Yesterday, being a New York reversal profile, tried to expand higher as a continuation from the profile of Tuesday, but ended up rejecting inside of the range, right, by creating a divergence at the previous daily high with the S&P 500. This makes me assume that the market will, even if it will keep trading higher, right, or will simply start trading lower from here, it will revisit some form of some kind of discounted level. Okay, and we identified inside of the range that, right, we're opening near 50% here of the discount order block from the previous monthly range. I'm going to be interested in seeing, coming inside of the New York session, how 75% and the low of it have been treated. Again, if coming inside of New York, the market simply had a shallow sweep below the previous daily low and is already trading higher, in that case, I can assume that the drawn liquidity will be at least right? If New York is already not trading above these levels, the current weekly high, and then past that we'd be looking at the range, say, of the suspension block located at 50% of the previous monthly range. So we're looking at the range of around 29,700 up to 30,000. Obviously, I don't think it's going to reach the 30,000 up to one day, but if today again, but for this expansion to happen, there needs to be a shallow sweep here of the previous daily low, if not no sweep at all. Okay, it needs to be a low of day that forms early in the day to give enough time for the daily candle to develop and to expand. Okay, so these are premium levels for, say, a classic buy day. If not, if you're looking at some kind of consolidation profile or New York reversal profile to the upside, right? So looking at premium targets, there's obviously the new day opening gap, which can be an objective. And overall, we're looking at the range of 25% to the high here of the discount order block. At 25%, we have the current weekly highs. Okay, so obviously this here would be the low-hanging fruit, but if you identify a profile that is open, low, high, close, you could be targeting 29,500. And in terms of a discount array, if you're looking to be short, low-hanging fruits objective for today's trading day can be a new weekly low followed by the lower half here of the discount rejection block that formed the previous weekly low. Right, selling short here into 50, 75, or the low of it can provide a safe target. And if price were to trade past that, then you have to look at the levels from a 3-month look back perspective, which would be the range of the weekly fair value gap. 4-hour chart, about the same story, right? We identified drawn liquidity being discount drawn liquidity, the rejection block, and all depending, as we said, on how shallow, right? If price will trade higher, how low does it first need to go inside of the range? How low does it first need to go inside of the range before trading back higher? If the run is shallow, then you can anticipate, in my opinion, for price to trade. We're looking at, again, at the range, say, of probably 29,500, 29,700, and then 30,000. Again, 30,000 a bit unrealistic, but these are levels to keep in mind. 29,500, 29,700, 30,000. And again, discount array, new weekly low, and then the rejection block. This is assuming that profile is open, high, low, close, and you're looking for shorts, right? So you're looking for discount targets. And on the 3-day look back, we analyze the phase of price delivery through the profile. We saw that price came from an expansion to an expansion, right? So here we had a reversal in the market. Yesterday tried to provide an opportunity as a continuation, did so in New York, right? Yesterday's profile being New York reversal, but ends up failing at the previous daily high. Okay, so again, the idea, because it failed at the previous daily high, is to, in my opinion, to assume that the market will want to revisit discounted levels. And so in discount, right, we have the range here of the fair value gap, located at 50%. Well, located in between OTE and 50% here of the 3-day look back range. And then below the 3-day look back range, well, at the lows, we obviously have relative equal lows, and then we have that rejection block in question. We identified also that in premium, we have the range here of a breaker. Since this is a breaker, you could also potentially use here standard deviations. Maybe we can look at this from a 15-minute chart. You can see that, well, if this is actually here market maker sell model and were to pan out, right, you can see that there's a potential retracement opportunity right? Well, not retracement, sorry, but levels that can be used for a distribution lower here. So in this case, we would be looking at the range of the fair value gap that would become an inversion fair value gap. 2 to 2.5 leads around the range here of range low, right? There's the order block itself here of range low from a 15-minute perspective. In my opinion, this here is where you would want to pay attention if the market were to trade down here to divergences with the current weekly low. And then if the market were to expand past that, then again we have the rejection block here inside of the range. Okay, I think that covers it for today. Good luck and good trading.